Hello traders and investors, welcome back to my channel. My name is Nick with NJMinvesting. Today I'll be getting into the sudden decline of market share prices across the board in the stock market. Today in general, just in case you're wondering, is September 3rd, 2020, and we'll be getting into why exactly the stock market crashed today and what you can expect in the future. Quick side note, I just wanted to say thank you so much for the support in my last video and my channel in general. If you are one of my subscribers or people that have commented and liked my videos in the past. I'd also like to apologize for not publishing any videos on YouTube recently, as I have gone through a bit of a move for school. I'm currently in a perfusion school in Philadelphia and have moved to explain my new room and new sights and sounds. Recently, I've been spending a lot of personal time with family and friends, as the move has been a significant one for me, moving from a small place such as Hawaii all the way to Philadelphia on the East Coast of the United States. I'm slowly getting into the groove of life in general and creating videos for YouTube. As you can tell, my lighting situation is a little horrid right now, but I wanted to provide you these videos because this is very pertinent, and I wanted to get back into the groove of things. And don't even get me started on my sleep schedule because it's really whack right now. It's like 1 o'clock in the morning right now, but I'm providing you these videos because I love doing this, and I want to thank you all for following me day after day. So thank you very much. Anyway, let's get into the main topic of this video, which is what exactly happened and why we are in such a rut in the stock market currently on September 3rd, 2020. If you're watching this video on or near September 3rd, you may have noticed that stocks have taken a significant dip recently. All the indexes today took a major hit, including the S&P 500 closing 125.81 points down from its original value, as well as the Dow and Nasdaq closing 808.5 points and 598.34 points down, respectively. The tech sector also had a major hit today, declining about 4.7%, and this is surprising because there was such a major gain in companies such as Apple, Tesla, Facebook, so on and so forth. And do note that this is the worst drop since March 2020, when COVID first hit the stock market. Some would say that this drop was inevitable, as the tech sector's valuations over time continued to increase and increase to unsustainable numbers. Tesla and Apple recently had major gains through their news that they would be splitting their shares, which piqued investor interest in these companies and spurred more investing into the tech sector itself. Nasdaq and other ETFs also maintained a upward trend and hit all-time highs, and many would say this is spurring unsustainable growth while we're in the modern era's worst pandemic in history. Was this really the correction that analysts and investors across the board realized that we would eventually have? Well, let's look at the prior day's performance before this crash, September 2nd, 2020. On this day, the S&P 500 and Nasdaq both closed at record highs. There were also rallies in sectors seemingly out of nowhere, including in utilities, materials, and real estate, leading to the sectors advancing the S&P 500 on the day. The Dow also spiked above 29,000, which was a first since February 2020, or pre-COVID. These gains were likely due from investor optimism, from stimulus from governments, central banks, and other institutions, as well as good news concerning the vaccine trials possibly coming out as early as November 2020, according to Bloomberg. Other factors include interest rates being extremely low during this time and investors wanting some form of profit from their investments by investing in YOLO or FOMO strategies such as in Apple or Tesla when numbers were skyrocketing. Earnings season is also in full swing, so many investors are probably just focusing on their personal stocks rather than the stock market as a whole. In all of these scenarios, eventually investors started to realize that they were overbuying and overvaluing stocks in their portfolio, leading to massive sell-offs today. Also remember that US-China relationships are a bit rocky right now, so many investors probably pulled out of their tech positions as they want to avoid the negative impact that tariffs will have on their portfolios. So yes, I believe that today's motions of the stock market were likely from an overdue correction of all the positive optimism that has been happening in the stock market thus far. So where do we exactly go from here, and is this the start of a bear market? Well, let's look at some positives in this bleak scenario. Big tech companies such as Facebook, Apple, and Microsoft are still up 27% in 2020 compared to the prior year. And although there are negatives that certainly may have hit the stock market, such as Dr. Fauci saying that a vaccine being released by October 2020 was unlikely, or that cooperative spirits may be declining due to the upcoming elections and the political things that are going on with that, I personally believe that this is a normal and healthy cycle of stock market trends. What goes up must inevitably come down, and that was this correction today. And just think about it. If we never had negative corrections in the stock market, then every single investor that invests their money in the stock market would be very, very rich. And that does not make sense, although that would be very, very nice. It's moments like today when investors begin to realize that the stock market isn't just some simple means of making more money for free, like an infinite money growth hack. Most likely, there will be corrections in every single sector over time, and you will incur losses. And really, every investor from this moment forward should realize that they should balance their portfolio as comfortably as possible. Every investor should have a balance in their portfolio of secure investments and more risky investments. This doesn't mean that you should just follow trends of what your buddy is doing that's making a lot of money, or hot stocks such as Tesla and Apple just because they are making a killing. Be smart with your money and have an opinion for yourself of what you like about companies. Research their history, research what they're doing, look into what their CEO is like and what their goals are, and look into their earnings reports. Even losses like today, and trust me, almost everyone today got hit significantly in their portfolio, and if not, please contact me because you are a genius. But across the board, every sector got hit. And basically, it's these moments when everyone gets hit where we have to start to realize and look at our own portfolios and see how we can improve as investors. Investing should be like a lifestyle and should be motivating to be improving upon every single day. And although you incur losses, you want to make sure that you can bounce back from them confidently as a learning experience, not as a dire detriment to what your life could be. And remember, everything I said in this video can't be considered financial advice because I'm not a financial advisor, but I'm just speaking from investor to investor because everyone got hit significantly today. Times like these are inevitable, but it's important to keep your head up and keep positive through the negatives, and you'll grow with your investments. That's a certainty. In my opinion, this is just a part of a natural and healthy market cycle and not the beginning of an endless abyss. The market will have unexpected spikes of growth and downturns of declining stock prices. And personally, what I do in these scenarios is to just hold my stocks through these downturns and possibly buy even more stocks to stimulate more growth when the market bounces back. My personal portfolio today wasn't hit too hard compared to some of the other investors I know, as I invest in many different sectors and actually buy shares of companies rather than just option contracts. It's days like today where diversification of your portfolio can really benefit you in the long run. And really, what you need to ask yourself from days like today are questions such as, is there a better way that I can protect my portfolio? Ask yourself, are you really investing in companies that you trust wholeheartedly and you've researched and spent time looking into? Or are you just following market trends and popular news that comes to pop up over time? How secure are your investments, and how can you diversify your portfolio to prevent something like this from happening in the future? These are very important questions to ask yourself and to know inherently as they can really direct you towards greater gains of your own portfolio in the future. That's all I really have today. I personally believe the market will always bounce back in time, because if not, then we'll be living in some apocalyptic scenario where we'll be driving cars around the desert, killing each other, or something like that. So have faith in the market. It will always bounce back. Always keep yourself educated on what's going on, have an opinion, and keep your head up. Every day is a learning day in investments, but it's days like today that can bring us back to reality and really get us back to learning again. The ups and downs of the market will teach you important lessons, and it's important to roll with these lessons rather than resist them, as they will make you better investors over time. If you like this video, please like, subscribe, and hit that bell for notifications. I'll be coming out with more videos soon, and my next video will actually be on Nokia updates. Hopefully a little better quality than this one. However, I wanted to rush this video to you all, as this was a very important topic that I wanted to talk about with you. Let's continue to grow with your investments. Peace.